Welcome to Spidell's California Minute. I'm your host, Catherine Zidane, and this week we're covering mismatched and unclaimed real estate withholding and things for practitioners to look out for. We'll be covering California-specific tax issues like conformity, Proposition 19, and the pass-through entity elective tax at our upcoming Critical California Tax Issues webinar on August 31st. You can see a full list of topics covered and get registered at caltax.com under the Webinars tab. Withholding at source is required from the proceeds of the sale of California real property by both residents and non-residents of California and for certain business entities, unless certain exceptions are met. The rate of withholding is 3.5% of the gross sales price, unless an election is made to use an alternative rate based on the amount of gain from the sale. The withholding is reported using Form 593, Real Estate Withholding Statement. However, there have been numerous cases where taxpayers have missed out on withholding credits because of a mismatched name and social security number, or where the withholding wasn't credited to the return. This frequently occurs when property is held by an irrevocable trust, but the beneficiary claims the withholding credit. The FTB manually processes payments that can't be matched to an account. This might include contacting the real estate escrow company if there's an error on Form 593, such as an incorrect tax ID number or missing information. The FTB also validates the notice of tax return change to ensure accuracy prior to mailing the notice with withholding credit problems. This manual effort seems to have reduced the number of notices sent by the FTB, but it might slow down the processing of these returns. Real estate and non-resident withholding is posted to your client's MyFTB account, so you can verify whether the real estate withholding has been credited properly. The same problem arises when a property is sold by a single-member LLC. The property is titled in the name of the SMLLC, but the member's social security number is used. When the property is sold by an irrevocable trust, the escrow company completes a Form 593 listing the name of the irrevocable trust as the seller. The trustee will receive a Form 593 in the name of the trust. If there was withholding on the sale, the trust then has to file an FTB Form 592 to transfer the withholding to the beneficiary and provide the beneficiary with an FTB Form 592B. Unfortunately, the current process does not allow the trust to pass through the withholding using the state withholding line on the Schedule K-1. When your client sells California property, check the client's MyFTB account to see if the withholding is posted. Look for FTB Form 593 and be sure the taxpayer's name and tax ID numbers are correct. If there's no Form 593, look at the seller's closing statement to see if there was withholding subtracted from the proceeds. Also, have the client contact the escrow company for a copy of the Form 593. And alert your client that there may be a problem and they should contact you if they receive correspondence from the FTB. It's important to check with new clients to see if they've had any withholding taken out of California real property sales in the last 4 years to confirm that these withholding payments are properly accounted for on their California tax returns. Recently, we've seen decisions from the California Office of Tax Appeals where taxpayers lost out on real estate withholding credits of over $15,000 and $20,000 because they didn't timely claim these withholding credits. We cover this topic in more detail in the upcoming issue of Spidell's California Tax Letter. To see what's included with a monthly subscription, go to caltax.com and click Publications. That's all for this week. Join us next time for another episode of Spidell's California Minute.